What is going on, everybody? And in this video, we're providing you a state of the market in stock picks for May 3rd, 2022. So leading up into one of the biggest weeks in history, we have the Fed coming up talking about some very hawkish-like moves with rate raises, 50 to 75 point basis moves, removal of bond buying, and I think that is one of the biggest things to really watch out for. There's a removal of the bond buying. I know it's something that they're saying they could remove at any moment, but I think again that backstop needs to be there because there is still a war going on, and if something changes there, people always fear their money and try to pull that out of banks. That is the backstop. If the Feds are not buying bonds, people will go and people will get turned away and they won't be able to pull money out of the bank. So being said, I think that backstop needs to be there. It's not saying that they won't, they sure can. But in my opinion, I don't think that they would because of that. It's not saying that they couldn't come in at 75 points or 100 point basis moves into the next meeting. It very well could. The big takeaway is what they are going to say on Wednesday. Are they going to come in very hawkish? Now, there's been a lot of hawkish talk, and then actually action taken has been very little action because of the fact that if they come in too strong, it could stunt growth, economic growth, and then that could cause more problems that actually helps. And even if we go off the theory that even though they are printing tons of money, if you have not noticed, Biden has been essentially giving a lot of that money to Ukraine that needs the money. As long as that value is created there, we have this unique setup where that value is created there, so it helps with inflation, helps keep inflation down because they're providing a resource that is needed in the dollar. It keeps the dollar strong. So being said, right now, technical wise, we are not looking good at all on SPX. We are floating, as you can see, around the 20 EMA monthly. Now, tomorrow is going to be critical on what happens because we open below this critical point of 41.32. We could possibly take a couple hundred points. So I'm saying it's all going to happen in one day. The sell-offs haven't been fast. They've been very slow. This is just part of what's going on in the current market sentiment. I don't know how much we would sell if we opened up below that. I think we could have a pretty strong day to the downside in anticipation of what's going to happen on Wednesday, which normally happens anyway. But that being said, if they come in below expectations, what everybody's expecting them to come in at some ridiculously high number, 75 point basis move and remove bond buying, if they come in at a 50 point basis move and they continue to buy bonds, purchase bonds, that could be a very bullish sign and continue us to start pushing up. Or if they come in very hawkish and remove bond buying, that could tank the market pretty good. It could give us the couple hundred points I'm talking about. Again, it's not going to happen all in one day. You'll probably get some massive move going into Wednesday evening, Thursday, and possibly Friday, if that was the case. And so you would get possibly a 100-point move within those couple days, maybe 150-point move. It really just depends on how the market takes it. Again, how you and I interpret the information is not how the market's going to interpret the information. This is why overnight digestion is really important, is to try to understand what is going on there. That's why even tonight, the stock picks I have tonight, there is no really stock picks. Really, this is what's going to happen with the Fed. I will talk about Tesla. I will talk about some of the other ones I'm kind of looking at here. But what you need to be paying attention to is what's going on with the Fed, what's going on with the general index, what's selling, what's not. Again, it's all hindering preparation for Wednesday. Now that we've made it back above this 21.32 mark, are we going to continue to hover here? Which is fine. We'll hover here into the Fed. I want to see more of this battle because the market actually looks like it was going to reverse this morning. It had a nice strong candle, and then the seller just came in and overpowered it. And then again, the sellers let off, and the buyers came back in. So the buyers are there at this level. The problem is, again, if we shoot and we miss, this thing again is going to break and we're going to sell off heavily. Now, being said, I'm very much a perma bull. Now, a perma bull ultimately, I believe the market always goes up. I mean, it's designed that way to go. We could have hit our lower low here, but we have to be very careful, because when you start looking at the weekly here, you have a huge gap from here to essentially down to the 39.17 mark. And then below that, again, you have another huge gap down to 37.65. And then below that, again, you have the 200. I don't think we'd ever hit this 200 mark around that 3,600 mark. I think that's too far. Again, I think this is just a general correction that needed to happen, because you look at the market in general, since the pandemic, we have gone straight up. And something I've always talked about is you need to be back testing old resistances. We tried it a couple times, but then we just, after essentially October of about 2 years ago, we kind of just went nuts and we just went straight up from that point. And then now we had that little bit of scare back in October. And then, of course, the Xmas rally. And then now we are back to some volatile times, because now we're starting to get rate raises and everything else. Again, even if we do decide to sell, I don't think there's going to be a crash. But you're definitely going to get, you could potentially even get another stronger move here. See, today we hit just below, we almost hit 16% at the low today before that last power hour candle. Again, we could potentially even go down further than that. Again, I think with what's going on with the war and sanctions and lockdowns in China, I think is adding to this. If it wasn't for that, I think we would have just continued up here and continued to push forward. But now with the war and everything, it's added a new element. So we got to take that into account. And so if you're looking, I mean, even another 5% move, which is what I'm kind of thinking is going to happen with the Fed. If you're talking about like worst case scenario with the Fed, I think we could get another 5%. So typically looking around that 3,800 is kind of what I'm looking around here. And then I can see us reversing and pushing back up from that point. Again, earnings, some have done really well. Obviously, forward guidance has taken down a lot of stuff. But right now, we're trying to determine how hawkish the Fed really is. Again, the market will normalize after this. And these meetings won't matter as much. Again, unless they get too hawkish and then it starts to hinder growth. When it starts hindering growth, that can be an issue. But even with the data and everything you get, you're really not going to see how it really impacts until you start getting to the next quarter of earnings and see how that plays out. So that's what we got for the index. Bitcoin, amazingly, is actually holding extremely well. And something I've said that the underlying infrastructure on the payment system has been slowly moving to crypto, if you don't know. And being said, I don't think the Fed want this market to come crashing down. They don't want crypto to come crashing down. They want to be first in crypto. Now, being said, they could very well try to sell this off enough back down to around that 32 mark to try to buy in. Again, I think this whole area down here around that 32 to 30 mark could be the new potential base moving forward. That's not saying it can't go below there. Obviously, if there's some big black swan events, it could crash this thing all the way down. This is why, you get these pumps. You should always take some off as you get these nice pumps up. Again, if it's long-term investments, that's a different story. You should be trying to buy when the market's red and then sell after the pumps. So, but again, if you are, not a financial advice, but nonetheless, any kind of pumps or anything, it's always good to try to take something off. If you're trying to do it for tax purposes, whatever the case is, again, not a financial advisor, but because you want to continue to roll over so you don't get taxed as much. But nonetheless, this is where we're currently at. And so, again, very interesting spot. I really like how Bitcoin is holding. In my opinion, that it's been pretty solid and hasn't even moved, even with the market index selling off heavily, uh, which in turn was initially tech, but now it's kind of drifted. This is why a lot of mid cap, small caps just continue to get pounded because people will pour their money into those things that they trust. That well-established companies. This is why you hear people talking about you should invest in companies that are already established, not companies that are new and up and coming. Tesla was at one point that way not too long ago, and it had a lot of volatility. And if this was the Tesla, 2-3 years ago, Tesla would have been selling off very heavily. But now that's part of the SPX and everything. You have to understand that it's not going to be as volatile as it once was. It's still to be volatile, but it will essentially sustain a good base and be well grounded, essentially for safe havens ultimately. And I think again that's what's happening with Bitcoin, especially again with all the underlying payment system that's going on there. And so, as always, I think we should talk about our safe havens, which is Tesla. Tesla had a nice bounce. Tesla's actually been holding this 858 very, very well. Now, again, it's going to be interesting to see if we do break up. I actually think Tesla's ready to rock. As soon as the market turns around, I think Tesla's going to be there. I think Tesla has a nice run if this is going to be a higher low. If the market continues to sell and it holds here, I think as soon as that market turns, this thing's ready to rip. And it's going to go back, I think, to at least probably 1100. Very strong possibility that could happen. Now, when is that going to happen? Maybe, again, the Fed come in and they give a very low, they come in below what everybody's expecting, 75-point basis move, and continue to buy bonds. That would be a catalyst to send Tesla essentially to the moon because it is a safe haven. So people will come after these. And this is, again, why I trade beta stocks. This is, again, why I say you need to be watching these when the market crashes. Again, any kind of market volatility, you want to go to safe havens first. And then when safe havens run and they run out of gas, then you go into the mid cap, small caps. And go from there. Now, there's been a heavy rotation between growth and value, but ultimately, I think, again, once we get past this meeting and really kind of get a handle on what's going on, I think we're starting to adapt more towards the market is starting to adapt more towards these meetings. And so I don't think you'll get very big dramatic moves after this. If they do come in high, that might be good. Again, I talk about sticker shock. The initial sticker shock will hurt, but after that, the market starts to become numb to it and it doesn't matter anymore. And so every meeting after that doesn't quite have that shock value to it. So being said, that is the one I'm watching. Upside, I've been watching SPX. Like I said, I'm really watching this level. If we do break below this tomorrow, I'm actually looking for this to retest the 41.28. I think that would be a good put entry. Again, the bounces have been so weak and they just continue to get weaker and weaker and weaker. And that is not a good sign for the bulls. So again, we won't know. Wait till the candle opens tomorrow. And wait till pre-market. This is why I do pre-market talks, because you want to see where this ends up in the morning. Again, if it comes below here, look for that retest for again, that 41.36 mark. So as it hits that, we could have a heavy dump tomorrow going into earnings or going into the Fed. So again, earnings are going to be affected by this. It doesn't matter. Big tech is over. Every other earnings aside from that, the market really doesn't care. And so if a company does really well, you might get a nice pop overnight. All those gains could quickly sell off, especially if the general market sentiment overpowers everything. So just realize that. So being said, it's very important to manage risk. It's very important to play light. It's very important to survive. Again, if we do break below this, I think this might be the last dip we have. And then I think that kind of clears the air for everything to us start heading up. Again, I think at that point, everything is going to be normalized. We kind of go into back into that normal cycle. We're going to downplay, sell off because all earnings are essentially done. Get ready, find a base, and then we'll start building our way back to the next earnings, next Q2 earnings, which will be, I think, we'll actually do really well on Q2, in my opinion, because there's so many downgrades on expectations. I think everybody will actually do better than they think they will. And from that point, right now we don't really know, but from that point, I think we could definitely push everything back up in that mindset. So that's what I got. If you made this far, I appreciate you. Go ahead and drop a like button. Until next time, I'll see you guys later.